But in any short period of time, the market really focuses on, speculation over what's going to happen from a macro standpoint, what the effect of interest rates and inflation are going to be on the economy and on companies. And I think it gets it wrong a lot. And I think this inflection right now, I would say this current earnings season, which is getting close to winding up, winding down, winding up, winding down. It's winding down now, has been one of the better earnings seasons we've seen in a while on two fronts. One, actual numbers that companies are coming out with. I mean, and I think whatever tempering companies had been doing in the last year or so in their expectations, they continue to beat and in the aggregate. And so, those so-called macro headwinds don't seem to be, again, in the aggregate. There's always those pockets of weakness or trouble, but in the aggregate, they've been fine. And what I think maybe changed now, or it looks like it might be changing, is you're seeing stock price reactions on the fundamentals as opposed to just what's the Fed saying, what's the Fed saying, what's the Fed saying. And I think that will come back into the forefront as the Fed has their meetings and statements and announcements and what have you. But it's refreshing to see, and again, I'll call it somewhat of an inflection point, that there were times over the last couple of years where we would look at earnings and we say, well, yeah, let's see, they beat, they're raising guidance on both revenue and earnings. What's wrong? And the stock's down 10, 15%. So, and God forbid they actually reported a less than expected, earnings, or, quarter that was less than expected. You see stocks getting now 25, 30, 40% sometimes. So, I think that is an important thing to point out from the standpoint of those that are, in the long run, it's just a blip. But we're here talking every week about what's happening out there in the world and the markets. And when there's an observation like that, I think it's worth mentioning from the standpoint of, maybe we're past this period of hyper focus on innovation as being bad. In many ways, that's what was going on in the last couple of years. If you were an innovative, growing company, you thought, oh, that can't work. We have to hunker down now and raise cash and hold it forever and ever, because inflation is going to, skyrocket. And I don't want to underscore that inflation is, even when it's at a level that people consider acceptable, it's still, 2% means you're going to lose value of your dollar. So you better be hedging by way of owning companies that have the ability to combat that. And if you look at just in the broader, indices, use the S&P 500 for that matter, the performance, if you will, of the market versus inflation has been stellar. I mean, it's not even close. So, as opposed to the performance of fixed investments over time, you're guaranteed, if you have a fixed return, you're guaranteed to be affected negatively by interest rates. By inflation. Will you maybe get some premium over inflation? Very, very minor. If you just hold cash, you basically get the inflation rate. So you're not really, you're not really making any money. You're not making any money on a real basis. You're not making any money over time. So argues for, as we always do, we argues for long-term investment, but just making a note and pointing out that this is the first time in a while that we feel we've seen reactions that are more consistent with what we might expect when there's been fundamental good news. So, and that's in the face of what is not a very healthy economic environment. I think we should have some policies that actually are favorable to small and growing businesses. I mean, then what? It might be, Katie bar the door, it's taken off. That was what happened in the 80s. And a rising tide raised all boats. I mean, all kinds of companies in all different sizes did well. But the fact that the market has been so driven by, we say the Magnificent Seven, call it 10, certainly 20 names. I mean, that's just ridiculous. It's ridiculous that we are seeing that kind of performance so concentrated with the largest of the largest mega cap names, mega sized names. And that's not healthy. It's not healthy for the long-term performance of the economy. Because it's from innovation that you get competition, that you get, better product, better services, and better pricing. That's just all there is to it. The best way to combat inflation is to grow the economy.